US President Donald Trump imposed reciprocal tariff. The all-time favorite use SIPs to ride volatility. India and the US are negotiating a partial trade agreement with a 90-day window in focus. Buyers choose livable, ready to move in or nearing possession homes in urban growth corridors. Hello and welcome to India Beat. I am Ashwinder Singh. It's April 14th, and if the financial year had a trailer, April 2nd was the plot twist. On that day, US President Donald Trump imposed reciprocal tariff on several countries, including India. We were hit with 26% tariff, though they now stand suspended for 90 days. So, what do these tariffs really mean for India, and what should Indian businessmen do? Tariffs are just friction, temporary walls in a world that wants to be boundaryless. But friction breeds resilience. Indian exporters should take this 90-day pause as a signal. Diversify customer markets. Don't be overly dependent on the US or EU. Focus on product value, not price. The world pays a premium for precision. Remember that. Invest in digital exports, bytes, cross-border, better than boxes. Now, India's stock markets showed resilience, down just 3.5% post-tariff. Globally, as all of you know, markets shook, but Indian investors largely held their ground, their sanity. However, the rupee weakened, becoming Asia's second worst performing currency. That's been a concern. So, is the investor confidence justified? And how should retail investors react? Well, confidence that survives chaos is always earned. Indian equity markets didn't panic because the fundamentals weren't the problem. The domestic demand was always there. But currency slippage tells you this, that you need to invest in hard assets and high quality Indian companies with pricing power. Avoid overexposure to currency driven debt or low margin exports. And the all time favorite, use SIPs to ride volatility, not fight it. Stay the course. Wealth isn't made in bull runs, it's kept through bear tremors. When the markets are down and your SIPs are on, that is where you start buying cheap. So never stop your SIPs when the markets are down. The RBI then cut the repo rate to 6%, the second consecutive cut. It's now signaling at an accommodative stance as inflation softens and growth needs support. The RBI governor said he might cut it further, or at least that was the indication. So, is this cut enough to spark demand? What's the opportunity for professionals, businesses, and home buyers? Well, interest rates are levers, but they are not lifeboats. They help. But as I said, it's not a life-saving drug. They don't create demand. They unlock demand. For the Indian audience, this means, especially for home buyers, it is a rare window. Prices are stable. EMIs are dropping. Supply is still rich. You can negotiate well. The last quarter has been a little soft. And if you're financially ready, move and buy a home. For professionals, refinancing high interest loans could add 5,000 to 10,000 rupee a month in savings. Use that to invest or upskill or start your SIP. And for entrepreneurs, lower rates mean cheaper capital. Use it to automate, not inflate costs. India and the US are negotiating a partial trade agreement with a 90-day window in focus. So, can this actually change India's growth trajectory? Trade agreements are formal permissions. Obviously, for smart founders, it can be a great opportunity because the momentum becomes positive. This one open door is good to strike new deals for entrepreneurs, but it's up to you to walk through. So, what should the startups do? Look into exporting SaaS, wellness, or D2C products to the US, where India made is gaining respect. For MSMEs, use government schemes that will follow this deal. Don't wait to be invited. And for investors, look at export linked stocks, especially in pharma, tech services, and defense. Now, quickly, let's look at real estate. What should home buyers and real estate investors keep in mind in this evolving macro? Real estate is local, but it's powered by macro psychology. In uncertain times, I've always said people crave stability and homes provide a beautiful hedge. Buyers choose livable, ready to move in or nearing possession homes in urban growth corridors. Investors, rental yield, long term infra tailwind will be a smart bet. NRI's weak rupee is equal to discount on Indian property. What else do you want? Time your entry. In the end, it's about timing the market, and you can time it now. It is about owning something timeless by timing the market now. So that's it for this week's India Beat with me, Ashwinder R. Singh. I hope you enjoyed it. If today's episode gave you clarity, share it with someone who needs perspective, not panic. Till next Monday, stay sharp, stay still, and remember, you don't grow by chasing noise, you grow by following signals.